In today's video, I'll reveal a simple yet effective trading strategy that I use within the first 90 minutes of market open to make consistent profits in the market. This strategy sets up every single day, requires no bias or any fancy indicators, and is completely rules-based. And in this video, I'm going to share with you the full strategy along with a 3-step checklist on exactly how to execute this strategy. And then I'm going to show you live examples in real time. So with that being said, let's get straight into the video. So in today's video, we're going to talk about the 5-minute scalping strategy. And this is by far the best strategy that is working in this current market environment to start off 2026. You guys have heard me talk about this strategy plenty of times. And in today's video, I'm going to show you exactly what the 5-minute scalping strategy is, along with a few different scenarios that we can use to help increase our win rate in this current market environment. And by using this strategy along with other concepts that I've taught on this channel, this is my P&L year to date. As you can see, I'm currently up over $160,000 on the year. One thing I do want to mention is that these results are not typical. I've been trading for close to 7 years now, and I lost for years in the markets in order to see results like this. And with that being said, the goal of today's video is to show you a complete system on how to identify a setup for finding winning trades in less than 90 minutes a day. You'll learn this one trading strategy that is repeatable and mechanical. And it is called the 5-minute scalping strategy, and it is broken down into 3 simple steps. The best part is it doesn't require bias, fancy indicators, and it sets up every single day. So the setup in itself, as I mentioned, is very easy to understand, but I'm also going to be laying out certain criteria later into the video to help us increase our win rate and to help us have more confidence and conviction in our trading. So first things first, we're going to talk about the foundation and what it takes to understand this strategy. Number 2 is the setup and understanding the direction and where the market wants to go based off of the first candle. And number 3 is the execution/entry and exactly where we're going to be looking to take our trades from. So step number 1 is the foundation. What we have to understand is what the first candle is and what does this first candle represent. Number 2 is understanding the direction, which is basically asking ourselves, is the market going to go higher or lower based off that first candle? And number 3, we're going to talk about the entries, stops, and targets, of course, since it's very important to understand how we can manage our trades. So let's go on to step number 1, which is the foundation. So what do we want to do? The first thing that we want to do is wait for New York Open at 9:30 a.m. Eastern Standard Time. So this is when the New York Stock Exchange opens. It is at 9:30 a.m. Eastern Standard Time. So if you live anywhere else in the world, make sure you're changing your time zone to Eastern Standard Time. This is going to be the main session because this is when the most volatility occurs. There's also other sessions like the Asia and London session that you can also use with this strategy. But in my personal experience, the best session, of course, is the New York Stock Exchange Open, which is at 9:30 a.m. EST. And this also works on all asset classes, stocks, futures, Forex options. So what we want to do is focus on the first candle of a new market session. So once the market opens and the first candle develops, we want to be focusing on the high and low of the first candle. You can do this on the 1, 5, and 15-minute time frame. Today, we're going to be focusing on the 5-minute time frame. As I mentioned, this is what's working best in this current market environment. This can change 1 month from now, and we might be focusing more on the 15-minute opening range if the market is consolidating. Maybe we can focus on the 1-minute opening range if the market is very, very volatile. So as I mentioned, you can use all different time frames when it comes to the opening range. One might work better in certain market conditions, so it's your job as a trader to identify which one is working better in this current environment and adapt your trading to the current market conditions. So first things first, what we want to do is identify key levels on the 5-minute chart. So as you can see, we have the 5-minute time frame pulled up, and what we want to do is identify key levels. We want to mark out the high and we want to mark out the low of the first 5-minute candle. As you can see right here, we have our first 5-minute high plus 5-minute low marked out. Number 2, now we want to head on to the 1-minute time frame. So as you can see right here, what I have is the 5-minute high and we have the 5-minute low. Currently, we're on the 1-minute time frame. As you can see, we have 5 candles. 1, 2, 3, 4, 5. So this is the first 5 candles on the 1-minute time frame. And that's why we have our 5-minute high, along with our 5-minute low marked out. So what do we want to do? We now want to wait for a break above or below the 5-minute range. So the question we have to ask ourselves is the market going to push higher and we're going to break towards the upside, or if we're going to push lower and head towards the downside? What we're waiting for, as I mentioned, is a strong candle close above or below the 5-minute range. Now what we want to do is wait for a break above or below the 5-minute range. As you can see in this example, we're currently pushing towards the downside. We have weak price action, and now we have a candle close underneath that 5-minute range low. This is the easiest way to determine if price is going to head higher or it's going to head lower based off the first candle. If we close underneath on the 1-minute time frame, that's a good indication that we're going to head lower. The next question is, doesn't matter if it's a strong candle close or if it's a weak candle close. That is all dependent on the context, which I'll touch up on later. But just based off that criteria, what we need is a candle close above or below the 5-minute range. Next, what we want to do is wait for a retest with strong / weak price action. So now that we've closed below the 5-minute range low, we're going to be looking for weak price action off our 5-minute range low for this continued push towards the downside. It would be the exact same thing towards the upside. If we had a strong close above, we'd be looking for buyers to step in for this continued push towards upside above our 5-minute range high. And what we now want to do is enter in with a strong candle close. So once we have that rejection candle, you can enter in if you're really aggressive, or you can wait for that confirmation candle, enter in on that confirmation candle, stop just to break above our 5-minute range low. And now what we can be doing is looking for continuation towards the downside. The exact same thing applies to the upside. We'd be waiting for that confirmation entry for a push higher. If you haven't watched my entry models video talking about the different entry models that we use on a day-to-day basis, make sure to check that out on my YouTube channel. Now let's go on to the next step, which is understanding entries, stops, targets. So as you can see right here, we have our 5-minute range high along with our 5-minute range low. Price breaks underneath our 5-minute range low. We have the retest, we have the confirmation candle. This is exactly where we can enter in with a stop just to break above our 5-minute range low. And now what we can be doing is looking for low of day plus continuation. And what I look for primarily is a minimum of a 1-to-2 risk to reward ratio. This is the easiest way as a beginner, is to use a fixed 1-to-2 risk to reward. If you don't have any other higher time frame targets, you can just use this mechanical model. And this basically means for every dollar that we're risking, we want a minimum of $2. So let's say, for example, in this case, we're risking $100. That means our reward, we want a minimum of $200. If the risk to reward does not offer us greater than a 1-to-2 risk to reward ratio, I'll be very cautious on taking the setup because I'll always be looking for my targets plus continuation. And with that being said, we understand the basics of the 5-minute range strategy. We're going to go on to plenty of chart examples here. We're going to lay out different scenarios as well. And of course, we're going to go over some examples that I took in real time using the strategy and the different types of scenarios that I was talking about earlier in regards to potential reversals, when to maybe not take the 5-minute opening range setup, and maybe when to actually take a reversal setup, in which I'll talk about later. If you guys want a full dedicated video on exactly how to trade reversals, and let me know in the comments section below. And with that being said, let's hop right into the charts. So as you can see, we're on our first example. This is going to be the classic 5-minute opening range setup with no bias, no fancy indicators, just pure price action. The best part about this strategy is that it is very mechanical. The first thing you want to do is mark out that first 5-minute candle high along with that 5-minute candle low. Once we have this marked out, all we're going to do is go into the 1-minute time frame and look for a break above or a break below. Now let's go into the 1-minute chart. As you can see, now we're on the 1-minute time frame. We're going to be looking for a candle close above or below that 5-minute range high and low. So as you can see right here on the QQQ, we're getting that candle close above our 5-minute range high. So now all we're going to do is look for that retest or that continued push towards the upside. As you can see right there, we have a couple touches right off our 5-minute range high. This is where we can go look long with this stop loss just to break below. And now you can be looking for a fixed 1-to-2 risk reward ratio back towards the upside. Now let's play out the tape. And as you can see right there, we end up having this nice continued push right up in towards our key level, which happens to be a fixed 1-to-2 risk reward. And you'll see a lot of the times on the charts, this is exactly what the markets will do. If you take a look at the Qs, if you take a look at the SPY, futures, stocks, options, this happens every single day in the markets. It might not happen every day on the exact same ticker, but it'll happen every single day in the markets. So what is our job as traders? Our job as traders, if we're trading the 5-minute opening range strategy, is to be able to identify which stock or which instrument that we're going to be trading on that given day has this highest probability for continuation. And you'll see a lot of the times the market doesn't always move up in a straight line like this. Sometimes the market reverses and does the complete opposite. Sometimes the markets will come down, stop us out before gravitating towards upside. So there's a bunch of different other scenarios that can happen when trading this 5-minute opening range strategy. And if you're strictly just trading this 5-minute opening range strategy without having context in the overall markets, it's going to be very hard for you to have conviction and confidence in this setup over a long period of time. And now I'm going to show you some more examples using the 5-minute opening range with more context and why it would make sense to take specific 5-minute opening range setups, and maybe why it would make sense to avoid certain 5-minute opening range setups. So as you can see, we're on my next example and we're on NVIDIA. We're currently on the 15-minute time frame. And you might be asking, why am I on the 15-minute chart? You mentioned earlier that it doesn't require any buys or any fancy indicators. And that is correct. If you want to use a strategy and setup as a standalone without any buys, you can go right on ahead. What I personally like to do is add some context into my trading. And context is done on the higher time frames. So as you can see right here on NVIDIA, we're currently in a clear downtrend here in the markets, making lower highs, lower lows, lower highs, and we're pushing towards the downside. So if the 5-minute candle forms coming into market open, preferably we like to trade this towards the downside. Why is that the case? The case is because the higher time frame is trending lower. So if we were to trade the 5-minute opening range towards the upside, it might be a little bit more difficult because the higher time frame is bearish, the market structure is favoring the downside, there's going to be bearish order flow. It would make much more sense if we're to trade the 5-minute opening range towards the downside because we want to trade with the trend of the market. Trading with the trend is going to be by far the easiest way to trade no matter what strategy or system that you use. So now that we just identified the trend, now we can go back onto the lower time frames to identify the exact steps that we've used previously. As you can see right here, we have that first 5-minute candle played out. What we can do is mark out that 5-minute high along with that 5-minute low. Now let's go on to the 1-minute chart. As you can see so far, we're having this pretty big push towards the downside. If we want to see continuation lower, break underneath for this continued push towards the downside. If we want to see a break above, we like to see the break back above our 5-minute range high. So as you can see right here on NVIDIA, we're having this nice push towards the downside. We have a candle close underneath here as well. So this is where we can be looking to take trading opportunities. So number one, the higher time frame is bearish. Number two, intraday is bearish as well. And now we're pushing towards the downside. Right here is an immediate retest. This would be a lot more of an aggressive entry. As you can see, price comes back up in towards our 5-minute range high. Plus we have this up close candle here as well. As you can see, NVIDIA pushes lower. We end up having that break underneath. Price comes back up, holds underneath our up close candle, also rejects off our 5-minute opening range low. This is exactly where we can go in short. This is actually where I took the market short as well, right on this candle with this stop loss right a break above. And now we can be looking for continuation towards the downside. In this case, I'm going to make it nice and easy and use a fixed 1-to-2 risk to reward ratio. I would recommend going back onto the higher time frames to mark out key liquidity levels that you can use as targets. But of course, if you're zoomed in on the lower time frames, you can use this fixed 1-to-2 to make it as mechanical as possible. Now let's play out the tape. So as you can see, we end up having this nice push towards the downside, and this was another good example of exactly how to use the 5-minute high and low strategy. This played out almost exactly like the QQQ example that we just had, but we added a lot more context. So this trade gave us a lot more confidence and conviction because we understood the higher time frame was bearish, right? So we're able to take this towards the downside. We're able to hold through this pullback with confidence because the market structure is still intact, the higher time frame is intact, the lower time frame is bearish as well, and we end up having that nice continue push towards the downside. So now with this being said, let's go on to another example that I have. So as you can see, we're back on the 15-minute time frame. Currently, we're on ticker symbol AMD. As you can see, nice push towards the downside, had some bearish earnings, another push lower. So just by looking at the 15-minute time frame and zooming out, you can see that the higher time frame is indeed bearish. So coming into market open, if the first 5-minute candle forms, we probably don't want to be looking for a reversal trade on AMD just based off the context that I've given and by looking at the higher time frames. It would make a lot more sense to trade with the trend and look for continuation lower. So now let's go on to the lower time frames. So as you can see right here, I have the first 5-minute candle played out. We're going to mark out the low, and we're also going to mark out the high of the candle. Now we're going to go into the 1-minute time frame. Now let's play out the tape. So as you can see right here on AMD, we have that 5 minute low marked out. You can see buyers stepped in off that 5 minute low, but now we're ultimately pushing towards the downside. As you can see right here, now that we're breaking underneath this 5 minute range low, what we would like to see? What we would now like to see is this rejection off this 5 minute range low for this continued push towards the downside. So as you can see right here on AMD, price is now pushing lower towards the downside. As we mentioned before, the higher time frame is bearish. We finally have that candle close underneath your 5 minute range low. Price pushes back, is rejecting off our up close candles. You can mark out this whole area in price if you'd like to. So you can mark out this general area, and now price has an upper wick. Some sellers are stepping in, and now this next candle, you can see this is what's called our confirmation candle. So the sellers step in here, but of course we're still above our 5 minute range low. So as soon as we break back below that 5 minute range low, we have a weak candle closure here as well. This is exactly where we can go looking short with a stop loss just to break above. And now we can be looking for that fixed 1 to 2 that I talked about. Now we can play out the tape. And as you can see right there, AMD had that nice push towards the downside. Of course, it took a little bit longer here, but if you're trading strictly based off that 1 to 2 fixed risk to reward ratio, of course, you're going to have to hold for that 1 to 2 instead of basing it off of key levels of liquidity. But as you can see right there, AMD, once it broke underneath that 5 minute range low, strong rejection, higher time frame is bearish as well. You can see the tape flip, and that's when exactly price started to move nicely towards the downside. And now with this being said, let's go on to another example that I have for us today. As you can see right here, we're on Tesla, we're on the 5 minute time frame, and this is going to be a great example in how if you were to add context in your trading, you can avoid taking a loss on this trade and actually end up winning with exactly what I'm about to share with you. So as you can see right here on Tesla, what we're going to do is mark out that 5 minute range high along with that 5 minute range low. And now we're going to go into the 1 minute time frame. As you can see right here for Tesla, price is having a really solid push towards the upside. You can see we're now breaking above our 5 minute range high. The levels that we can have marked out is this down close candle here as well. So all we're looking for is the retest off our 5 minute range high for this continued push towards the upside. So as you can see right there, Tesla pulling right back into our 5 minute range high. Let's say, for example, you get in on this bullish reaction, maybe as the candle is forming, and we're looking for continuation towards the upside. In my opinion, if you're looking strictly just based off the chart with no context, this looks like a good setup. All you're looking for is, of course, high of day plus a 1 to 2 risk to reward ratio. Let's say you enter in the trade right here. Of course, your stop loss is going to be a break below. You're looking for a fixed 1 to 2 for continuation higher. And now you play at the tape. So as you can see right here, you get in, immediately rejects off a high day, has a huge push towards the downside, and you end up getting faked out. And now you're questioning why this strategy doesn't work, even though you executed it perfectly. Well, number one, you didn't have context, and let me show you why. So as you can see right here, I zoomed out on the charts. We're on the 15-minute time frame. You can clearly see that Tesla is in a clear downtrend. We're making lower highs in the markets. We're continuing to push towards the downside. There's a very good chance that we're going to end up rejecting off this level and we're going to end up continuing lower. So just by looking at this context, we would much rather look for that 5 minute range low than looking for a 5 minute range high retest for continuation higher because the market structure is bearish. And now if you go back onto the lower time frames and we play out the tape, you can see that now price is actually breaking underneath our 5 minute range low. We can have marked out this area. We can drag this over. As you can see right here, price is now coming back up in towards our 5 minute range low. We have a couple rejections right off this 1 minute order block. Price breaks back underneath this 5 minute range low. This is where we can actually go looking short. And this is where I shorted the market with a stop loss just to break above. And now we can be looking for a fixed 1 to 2 risk to reward ratio towards the downside. And now we can play out the tape. And as you can see right there on Tesla, we end up having this super solid push towards the downside. Perfect rejections right off our 5 minute range low. Once we got back underneath, nice retest off our key level, and we went straight towards the downside. And this right here is a great example of using context. context is very important. We were able to avoid taking the first trade, which would have ended up being a loser, and we're able to capture the second trade just because we use context and logic based off the higher time frames. And that's exactly what I always preach. Context and logic, higher time frames do always hold more power. And you can see how using the higher time frame context will make the 5-minute range strategy so powerful. If you don't have context, it's going to be a lot harder to have confidence and conviction. So when you add the context, that's when you have confidence and conviction, and that's when you can take these trades on a consistent basis. And with that being said, I hope you guys did enjoy the video today. If you guys did find some value, appreciate it if you guys drop a like and sub. And with that being said, I'll see you guys next week for a brand new video. Peace.